and welcome to this episode of Inside Legal ESG podcast series. Today, we are so fortunate to have with us Alex Kruzel of Telesto Strategy. She is the founder and CEO of that company. Alex, welcome, and tell us about how and when and why you founded Telesto Strategy.
Thank you, Pam, so much for having me today, and really happy to support the great work that you're doing. Briefly, just about my journey, how I ended up where I am, actually started 20 years ago as a Peace Corps volunteer in Mozambique. I remember very clearly it was my third day on the ground, going down this valley and hill, and raining, soaking wet, full of mud, kind of crabby. I bumped into my host sister, and she said, I was complaining. I said, I hate the rain. She said, well, Alex, I really like the rain. I said, why? In disbelief. She said, well, Alex, when it rains, it means we have water to drink. And it was the first time in a life of relatively a lot of privilege to realize, oh my God, as obvious as it sounds, we're dependent on the natural resources around us. And that spurred something within inside me. And I didn't have all the vocabulary then that I do now to start a career in sustainable development. First with Deloitte and public sector finance, sustainable growth, then corporate side, thinking about how do you infuse that into sort of a corporate growth strategy and global expansion. And then ultimately with a boutique firm in Chicago. And when it came time for me to lead, I was asked to lead my former firm. I said, yes, but only if we could really contribute to this growing body of knowledge of how do you really do this? It's hard, right? How do you help businesses grow by integrating sustainability, ESG into what they're doing? At first I had buy-in. And then when it came time to actually investing in this new direction of the firm, there just wasn't the agreement, which is fine. So I said, okay, I'll just start it. I'll take a bet on myself. So 3.5 years ago, I started Telesto with this intent and a big vision to regenerate the planet, knowing we can't do it alone. I'm working with private, with nonprofit, with government, because it's going to take sort of a full wholesome approach to get this done. What it means day to day is net zero, climate risk, ESG reporting, but then also on the growth side. We work with legal and we work with the built environment. We work with knowledge-intensive industries. We work sort of cross industries with a very specific focus on climate, ESG, sustainability.
And so would you describe Telesto Strategy as an ESG consulting firm or management consulting firm with a focus on ESG, or is it all of the above?
Yeah, I would say probably all of the above, Pam. We're mission driven. So although we're for profit, right, we do this on purpose to demonstrate that it is possible for our corporate clients. We want to make sure it's clear that this needs to be part of growth, not just compliance. So when we frame it as management consulting, I think that can help our clients understand what it is we do. Although often it starts with disclosures, ESG reporting, and we're all in on ESG. We're not wavering on that topic. So I don't hesitate to describe ourselves that way if that's what's most understandable for our client.
So what are you seeing as the hottest trends emerging right now with your vast industry representation across your client base?
Yeah, I always love these kind of discussions, but I kind of love to stir the pot by saying like the least sexy option, which is, just rolling up the sleeves of those on the ground doing this work and getting it done. So targets have been set, 2 or 3 years ago. SBTI, CDP, like everyone, right? Like up in arms, thousands of people signing on to targets, whether they realize what they were signing up for or not. I mean, we're realizing right that now more fully, but yet I'm so heartened day to day that now as corporates figuring out, okay, what does it mean to have on-site solar? Or what does like the greening of the grid mean for my net zero goals, right? Now it's the operationalizing of these strategies, which is actually hard and takes a lot of legwork and is less sexy, I would say. But we could talk about higher level things that are to come to mind. Cyber, and this is really at the board level that I'm seeing, cyber is being recategorized and managed as an ESG risk. I think it's a way to sort of find some efficiencies in risk mitigation strategy. And why is this happening? Couple things, insurance is no longer a good enough option to mitigate cyber risk. So you need good G. You need good process, you need good control, good proactivity, and that needs to be part of your governance system to mitigate cyber risk. we know each instance of an attack could be anywhere on average from $4 to $10 million. And so again, you can find some efficiencies by, sort of putting some of those resources proactively into good governance. Obviously, on cyber, people are impacted, employees, public writ large. That's why the S is sort of hitting on the ESG and cyber. And then it's investor driven. Investors want to know about cyber, like they want to know about ESG disclosures, especially climate risk and carbon. So again, what are some efficiencies there? So cyber is one of these up and coming emerging trends. And then the second is green financing. I'm so heartened to see the issuing of green bonds in this country, where we think about 500 billion in 2022 alone. 13% of those bonds are in the US, and the clients we work with, especially in the built environment, REITs, municipalities, building construction, financial institutions, are really moving the needle on that one. And that will continue to sort of fall into other industries and sectors.
And so that sort of leads me right into the next question. What do you think 2024 has in store for us, has in store for ESG, especially in the political environment? And we'll get to the politics of ESG in a few minutes, but what do you see on the horizon for 2024?
Yeah, I actually think, maybe there's two or three things I could highlight that maybe I haven't spoken to yet, and anticipating what might be discussed around politics. One is nature and biodiversity. People at the corporate level I would say, haven't really been taking hold of it as readily as they might. But the COP16 coming up in Colombia this year, TNFD being released, at least boards and corporate directors, C-levels understanding what it means and the biodiversity risk, and knowing that has to show up on their financials. A huge question mark, and I think my clients that I'm seeing are taking it a lot more seriously. And then the second point too, for 2024, CSRD implementation is here and it's real. And thinking about double materiality, all the reporting requirements, how does that converge with California reporting requirements? Like, this is coming into effect now. And then because of the cyber ruling from the SEC and what's to come very soon on that question, thinking about competency development at the board level is another thing that I think people, boards that I'm talking to are going to be much more proactive about, and realizing, okay, on a quarterly basis, we need to be doing more for our board directors.
So you mentioned CSRD. Describe, for just in case we have any listeners who aren't familiar with CSRD, where it's coming from and what's required, even of US companies. Give us a little background on that.
Yeah, absolutely. So, the European Commission has set the tone in terms of what are they requiring corporates to disclose. And it's sort of like the Brussels effect, right? Where you have global standards and corporates have to perform to the tightest or most regulated standard. And for US corporates, and many of them who do business, have holdings in Europe, have subsidiaries in Europe, they're exposed to these requirements. And so, Article 8, Article 9 are the big ones. They need to disclose their emissions. They need to think about scope 1, scope 2, scope 3. They need to disclose their climate risks. And there's a whole kit and caboodle. This one is a little bit more complex to describe readily, but there's a lot of great resources online for those to figure out. Likely by now, they should know if it applies to them, but these are those that are publicly traded, are those that are, again, of a certain size that are required to take on this reporting. And it starts now, it's gone into effect. So it's no longer wait and see. It's sort of like, okay, corporates who need to do this are moving. And that's where double materiality comes from. It's not just the sort of the typical maybe GRI standard, but it's a two-way materiality, the impacts to the business on the planet, and then vice versa. So that's what companies are figuring out. Okay, how do I do that in a way that meets the standard that's been set?
So you brought up an interesting point that the rules apply to public companies of a certain threshold. But tell me how it trickles down to their scope 3 vendors and suppliers, because that's where I think most companies are feeling a sense of relief that it doesn't apply to them. But guess what? Give us your thoughts on that.
Yeah, well, I see a lot of examples come up. And, this is maybe more of a domestic example, but something that just happened very recently. We've been getting a lot of interest from, sort of downstream logistics companies, construction companies in the US. And a lot of these are homegrown, Midwestern, mid cap from anywhere from 800 million to 2 billion or so. So like a nice size, but they're coming to us and saying, look, Alex, we want to compete on ESG. And, to me, this is new, right? This is not
It
something
is.
I've heard of quite yet. And they said, I'm like, and I asked, well, why? They sort of spiked my curiosity and they said, look, Meta's requiring this, Amazon's requiring this, and I want to be the vendor, the supplier of choice. And I will win a lot more contracts if I do that. And so that's where I'm seeing this new hustle that's emerging. And similarly, out of Europe, now that again, the requirements are in place for, again, large corporates to say, here's my
Mhm.
scope 3, they need to have a reasonable plan that's, again, third party verified in terms of how the reduction will actually happen. And so they're
Mhm.
going to look to all their suppliers, and everyone will have to raise their hand and do it. Otherwise, they're going to lose business.
Yeah, including law firms. I'll just throw
Yes,
that
yes,
in.
yes. Including law firms too.
So we've touched on the regulations that have come out of the Brussels effect, as you called it. As we record this podcast today, there is anticipation this first week in March that SEC are going to issue their rules this week. Tell me what you think is going to be included and how it might change what's happening in the US.
Yeah. Well, I can't overstate the magnitude of what's about to happen. And everything that I'm reading, seeing, and hearing says that it will happen tomorrow,
Mm-hmm.
when, it's voted upon. And I'm one to say that this is necessary. Like those looking back 20 years ago, the good example here is SOX, what it did after sort of Enron and what it did to level up governance of corporates in this country. I think that's a fair analog to say, look, now's the time. And we realize this is not going away. And the SEC is going to require this. What corporates need to think about, three things at least come to mind. Operational emissions. So that means there's scope 1, scope 2, right? So if you're a law firm, your scope 1 and scope 2 is not going to be that much, right? Because it's not like, you have a, manufacturing site and you're manufacturing tables or something, right? There's no, because of, the lease holdings, travel, right? A lot of that ends up in being in scope 3. We expect scope 3. I mean, Reuters broke last week saying, look, scope 3 is likely out to prevent
Mm-hmm.
litigation and to make it a little bit more sticky. Also in the SEC, when it sort of announced the initial rule, they had 14,000 letters that came
Yes.
in, and a lot of lobbying against scope 3. We'll see. I've heard both sides of it, actually, whether it'll be in or out. So again, operational emissions at the very least, maybe scope 3, but not so fast on sort of being relieved about scope 3 because you're going to get those pressures from Europe and from California, Canada, other places. And then the other big thing is about climate related risk on business and management of those risks. So again, TCFD, ISSB, all those things will need to be done and need to be disclosed. And then don't forget, right, third party assurance is part of this. First, limited assurance and then reasonable assurance. So that threshold will be increasing in terms of making sure what you say you're going to do is actually validated by an outside service. And then they'll also require you to put forward climate related targets and goals, and you'll have to report on those. And then you'll need financial statement disclosure on the financial impacts of physical and transition risk. And then timing up for grabs. We're going to see. That's a question mark right now. I haven't seen a good projection of what's to be expected. So, I wait eagerly. I think it will happen. I'll be surprised if it doesn't. And even though I'm all for one about like the attitudinal drivers of doing this, I do think this will ultimately be good for everyone because then we can all play by the same rules,
Mm-hmm.
and then can compete on this in a meaningful way. So I'm supportive of what's going to happen, and I think it's likely.
So you touched on third-party assurance. Who is qualified to offer that third-party assurance? Do you think that's going to be defined in the SEC, or lawyers and accountants and management consulting firms going to jump on this and say they're qualified?
Yeah, I mean, hey, this is one of those business opportunities of a generation for whoever can figure it out. You have a lot of auditors and big 4, big 5 firms saying it can be us, but we don't exactly know. Like, don't look at us too soon, right? Because we have to sort of give us time to craft a methodology. that again won't hold us liable for potential negative financial consequences of this too. So there's risks to be mitigated in terms of that sort of the supporting ecosystem, if you will. But I think it's going to take, like you said, lawyers, auditors, management consultants together to sort of figure this out. And they will, right? There's just too much at stake. And again, the SOX was the greatest thing for the big four, big five auditing firms, right? Because
Yep, yep.
it's carried over business for years and years and years and is not going away. So I think it's going to take a lot of people, a lot of great minds to figure that out. But I believe we will.
And I also believe that there's enough business to be had from different perspectives. So for instance, from the accounting perspective, the auditing skills are going to be needed. From the legal perspective, the advisory skills are going to be needed. And from management consultant, same thing, the strategy consulting will be needed. So there's enough for everyone to be at the table to make sure that what emerges is the best product possible.
I think that's really well said, Pam. And two, since you have to do this stuff, I think the smartest businesses will then think about with their partners, well, how do we get more out of it? How do we use this data and all this rigor in the process to grow for new products, new markets, new services, new business models, right? So I think that's also the flip side of all of this, that it's easy to lose sight of with it when it feels so heavy or new or burdensome. But we have to remind our partners of that, the flip side.
Absolutely. There's a huge, like you said, opportunity of a generation.
Yeah.
So I promised you we'd get to politics. Given the anti-ESG sentiment here in the US and to some degrees infecting other countries as well, but really polarized here. How do you navigate that with your clients, and what are you seeing with respect to that kind of pushback philosophically?
Yeah. I'm really heartened by this one. I would say, based on my anecdotes, and there's better data than my anecdotes, but my anecdotes say my clients don't care about the rhetoric. They are hunkering down and they're figuring it out because so many can see the regulatory pathway and the demand from their customers or clients. That's enough for them, right? And whether it's called ESG or sustainability or other things, they know that that next level down is non-negotiable. So it's become table stakes. Because the rhetorics, though, can be so damaging, they're thinking about, okay, how do I still do this good work? Like you said, what's the hottest trend? My hottest trend is not a hot trend or a sexy trend. It's like, let's just get the work done, and whether we're talking about it or not, we're going to figure this out and throw resources at figuring it out. And then I mentioned there are good empirics on this. So if you look at S&P data on ESG reporting, more Fortune 500 or S&P 500 companies use the words ESG in their reporting last year than in previous years. When you look at data from Reuters, right, 75% of C-levels in the US strongly agree that the role of ESG, and this is the word they use, ESG, in corporate performance will grow in the future. 60% believe it can be a competitive advantage. When you see and hear empirics like that, I encourage my clients, stay the course. You only have things to gain by continuing this. And if you're smart about cost control and what you invest in, there's a path forward on this. Like, again, if you do a better job, it's the counterfactual of managing your cyber risk, for instance, with the average instance costing anywhere from $5 to $10 million. Again, it's sort of that, well, counterfactual puts just a small fraction of that into building process and systems, and you'll save, right? So they need the long view to understand that math, though, and I'm not saying it's easy. And then the greatest thing about all of this, in my view, Pam, I buried the lead a little bit here, is that the economics make sense. So, clean energy transition worldwide, energy, like sort of the financial industry, dictate the movements of everything else, right? And when you have the economics of the clean energy transition, levelized cost of energy, meaning that solar in particular is more economical and favorable for, again, long-term wealth creation by corporates and investors. It's now cheaper to install than it is to even maintain fossil fuel infrastructure. What does that mean for investors who aren't looking at ESG criteria and only financial performance? That's driving a lot. And so that's kind of going under the radar, but I think that's also working to hasten this transition.
I completely agree with that. And I also, in my client base, am seeing we're there, my clients are staying the course
Yeah.
despite the political rhetoric. Are you seeing any of your client base sort of changing the language? Instead of using ESG, they're using responsible business or sustainable practices? Or tell me what you're seeing with respect to the language of the taxonomy.
Yeah, only in a few. Only a
Mhm,
few. Most of the time it's ESG. There's been a
mhm,
couple that have gone the way of sustainability. When it comes to responsible business, that's kind of a hill I'm willing to die on. I say don't do it. Because that is a sort of thing. It's like milk and honey. There's no counterexample. There's not a company who wouldn't want to say I'm responsible business. You say everything and you say nothing by doing
mhm,
it.
mhm.
So that's what I kind of discourage, because then it's sort of deja vu to CSR, and I'll just go on the record saying we don't need that again.
Right. And my problem with CSR, responsible business, is unfortunately those terms have sort of devolved in some people's minds, too many people's minds, to mean volunteering and charitable giving,
Exactly.
which in my opinion are immaterial compared to the impact of your business itself, right?
Yeah. Yeah.
So and this is a question I love to ask all my podcast guests. If we talk again in a year, which I hope we will, what will have changed?
Yeah, well, I have maybe two answers. One that's for the market writ large, and one for legal specifically. Writ large, 64 countries will be voting this year.
Mhm.
And I'm very, very keen and interested and a little bit on edge, quite honestly, about what's going to happen politically. That will shift things potentially. So we'll have a better sense of, the future of the IRA, let's say, or other things that could be happening. And again, that's sort of the crystal ball thing. So we'll see what happens there. Another thing writ large that I don't think enough corporate boards, C levels are thinking about is the instability of the insurance market and what it means for corporates, for law firms, with premiums. Every top insurance provider is losing a lot of money because of physical risk. And that's going to change the insurance landscape dramatically over not only next year, but the next 5 to 10. Premiums are just going to be harder and harder to get. So again, the good business and business continuity is based so for so long in our country on the insurance market. So that's something. On the law firm side, what I'd love to see in a year's time is really addressing the elephant in the room, which is around advised admissions. And then the role of legal, which is another generational opportunity. Boy, has legal led and being so creative about services, going right to market. You look at Am Law 100, 95 of them have services market on ESG, which is atypical in my work across industries and sectors. Most don't have a green product or service in the market. On the flip side, where legal is really, really lagging, it's only 10 of those 100 law firms that actually have an ESG report out in market. So they're not sort of taking their own medicine. So I would love, and for the legal clients we work with, that is a way to differentiate and compete and will be required of them. So I want to just sort of speak to sort of some of those broader dynamics in the market, politically, insurance, as well as what's up and coming for legal around advised emissions and how they can lead with ESG reporting.
And I think to your earlier point about some of these regs only applying to public companies, I think it's interesting that California does apply to some private companies.
Yes.
Most law firms, well, all law firms here in the US are privately held. And even though the regs don't apply to them directly in most cases, they will have to comply in order to get the information that their clients need if their clients are falling under those regulatory requirements for disclosures as part of their scope 3. So I think it is going to hit law firms, and you would think they would know this, and maybe they know it, but just haven't taken action yet. But it is going to require moving forward as a law firm, regardless of being private.
Yeah, a lot more to come there.
So you and I work in the same space, and this space can be incredibly exhilarating, but it can also be incredibly exhausting and frustrating. So what keeps you going? What gives you hope?
Yeah. It's such an important question, Pam, because it can be hard, when you're in climate, sustainability, ESG, and you see headlines that are non-linear, right? They go back and forth, ups and downs. For me, it's twofold. One, I mentioned this already, the economics are on the side of protecting the planet and strong planetary climate positive growth. Um, so that's exciting for me. Now we can convince CFOs. Whereas before they would say, look, I understand why you might want to do this, but I don't understand how it would work for my business. Now I think we can overcome that
Mhm.
with empirics, with high quality empirics. The second note I would end on is kudos to Gen Z. They're willing to vote with their feet on where they want to work. And they really want a organization that has a meaningful purpose and is demonstrating high marks on making this reality in that organization. And I'm seeing this across industries. Legal in particular, I can see a lot are having a hard time retaining and recruiting. And I think this is sort of a missed opportunity, if you will, to recruit not just the best minds, but the best hearts. And how do you do that?
Mhm.
That beautiful mix is, I think, often leaning into sustainability, how you be more green or ESG, whatever you want to call it. But I think it's an untapped opportunity for legal specifically. And it does give me a lot of hope.
And that also gives me hope as well, because I think, particularly since our audience is lawyers, I think law firms and lawyers are feeling pressure from their clients and from the incoming talent and
Yeah.
everything in between. So I think we're ripe for revolution or evolution. Let's call it evolution instead of revolution, to the next best thing. And I'm really excited to see that happen. I can't thank you enough for your insights, Alex. This has been a fabulous conversation. I'm sure our audience is going to walk away enlightened, and your insights have been valuable. Thank you so much for being with us today.
Thank you, Pam.